Hey, what's up, outliers? Happy Saturday. Today we are on our meme stock vibe. I got a new mic stand, so I've been tinkering with it, trying to get it set up how I want. But so far, it's actually really sick because it essentially takes some of the issues I had with my old one and fixes pretty much all of them, which is rad. Big fan. So how's everybody's weekend going? Everything good? The agenda for today, I have a handful of names that I want to take a look at. I have them in the title. Some of these I have positions in, some of them I do not. But I do want to just look through and see what the latest and greatest is. We will absolutely hit GameStop today. And yeah, let's just dive right in. First, quick recap of like the market writ large. Last week was broadly risk on, right? We hit new all-time highs. SPY is continuing to grind higher. We're still seeing elevated vol in small caps, and volatility in general is coming down actually quite a lot. So between those, there's a bunch of thematic ideas that I have, from different sectors and whatnot. Doesn't really apply to the content or the target for this stream. More so, it gives us a bit of a backdrop, though. Understanding how the market is behaving right now, what things tend to be doing well, and what things seem to be struggling a little bit. And there is a fair disconnect between stuff. One of the things I am noticing is biotech has been running pretty heavy, interestingly enough. So I want to take a look at some of that as well. There's a couple biotech ETFs. I don't know what the most liquid one is, though. Biotech ETF. What's this one? I want the more liquid one out of the group. It looks like IBB. Yeah. So IBB, I guess, that's actually interesting. I didn't realize that IBB had more than XBI. I would have guessed XBI. That's fascinating. Anyways, the interesting thing about this is the relationship between how biotech is doing right now and what we're seeing from places like other larger healthcare providers, there absolutely is a massive gap between how they're behaving right now. So healthcare itself is essentially rolling down to lows, right? So if I plot those next to one another for you, we got to go back to this one. Let's do this one. And that's a lot. Yeah, that's fine. We'll do XLV and then XBI. And what do you notice about the difference between these two that are clearly within the healthcare sector, but as you look at their performance over the last several weeks now, actually, the difference is hopefully quite apparent, right? And it's that biotech has been coming alive. And that means that there's been a series of pretty solid new drugs that are positively progressing. That's typically what that will boil down to. So I think that relationship is interesting, and biotech names really do have a lot of meme stock qualities, I would argue. So let's take a quick look just real fast in biotech. This is more just out of curiosity for me as we're looking at this stuff, and then we'll get into the other names that are on here. But I do want to take a look at, does this do the constituents? Maybe within healthcare, we can narrow it down again. These are large cap bios. So let's do some small cap bios. we will go into the heat map. And then let's go. Biotech. This is what we want. Here's the gold mine. So I'm just going to flip through some of these names down here and see how they're doing. I wish that would get out of the way. So like this is the shit that I'm talking about. Look at this. So right now there is a massive breakdown between how something like this is running and how the larger healthcare sector, literally the entire residual healthcare sector, is doing. And I always find these interesting because you can find really solid opportunities in stuff like this. I just want to see why we got to go back, it looks like, to the 10th. There will be a specific reason. My guess is some sort of drug approval, new thing. Yeah, see? This is the cool part about biotech, is that it's typically pretty fucking predictable. At least in terms of the causes. What they're going to do is very difficult to predict. Except you can use options very successfully for that, by the way. That would be a good mini series, like trading biotech with options, because that is a big part of what I look at, because there is a lot of opportunity there. Anyways, this says they reported positive results for a trial evaluating the efficacy of a treatment for pulmonary arterial hypertension. So that looks like, I don't know what the primary cause for pulmonary arterial hypertension. Hypertension a lot of times is fat people, but obviously it's not the only thing. But hypertension very frequently is fat people. Insmed developing experimental drug called whatever the fuck that is. Inhalation powder. Wow. That's crazy. Now, the other really fascinating thing about stuff like this is very frequently the entire performance of this stock will be based on literally an individual drug. So if you want to talk about concentration risk, you have that in spades when you're trading biotech. You are literally trading what news might be favorable for the stock, and there's a high chance that it's not favorable. Let's take a look at the options in here real fast. INSM. Nope. That doesn't look great. Yeah, that doesn't look great. That doesn't look great either. So this looks like this looks like a bit of a mixed bag. Bit of a negative tilt as I look at this. Yeah. What is that, the 105s? So it looks like probably short calls at the 105s. Curious. Hey, yo, what up, Reese? Bay Area says, when you get to Palantir, I'd love to take a look at a long position. Yeah, sure. Throw whatever you have on in there and we can definitely take a look at it. All right. Let's flip through some of these really fast. Let's start with AMC. This is a quick one. So this one I'm still trading because, again, you guys know the whole backdrop behind why I'm trading it. This is a covered strangle because based on the bet that I have, I need to maintain long shares. So this about standard, right? Just crazy general volatility, implied volatility percentile as compared to something like GameStop right now is astronomically high. comparatively. It's at 74% implied volatility percentile, even with this kind of rally. The other thing of note here is that this is actually pretty fair price behavior, meaning aggressiveness movement leading into earnings. Very frequently, as names get closer and closer to earnings, you'll start to find that they tend to kind of run sideways. So something to be aware of. This is abnormal, is all. But if we take a look at the overall behavior in AMC, let's see, super short. So a lot of sold premium, and these look like on the put side. So that looks like actually potentially just a lot of short puts. Let's take a look. So a build out of the 4 calls to the upside. The overwhelming majority of these are bought. These are really near term as well. Take a look at that. 19 days out. Look at these. And they're still in them. Like, this is a $150,000 candle, and this is $417,000. Like, this is a pretty, that's a pretty significant run for this. So options here look pretty bullish to me. Let's just take a quick look at vol and then we'll move on. Oh, interesting. So what I'm doing here is when I'm looking at this, I'm visualizing the term structure. But the cool part about it is it also has like the actual term structure here, which is, I find, quite useful. So this is abnormal. So to show you something that looks more normal, we'll grab Apple. This is a bit more normal. Even this is a little aggressive. They have earnings, if I'm not mistaken, sometime. Let me see when their earnings is. Yeah, so that's still a little bit blown out because their earnings at the end of the month is high. So like this cycle is still a little bit high. But nonetheless, what's something that recently reported? Wells Fargo. Yeah, this is more normal. So for things that don't have some sort of earnings release coming up or something like that, this is more typical for what you might expect to see in terms of total vol. But AMC, you'll notice it's really jacked in the front, and a big part of that is because it does have earnings coming up. But notice the difference in the disparity in how jacked the front is. This is, I would consider, significantly jacked. So I think the option positioning in here, at least in the front, looks generally bullish coming into earnings. And those recent entries coming into earnings is interesting because those are pretty big premium days. So if we take a look at the overall behavior over the last 6 months, you'll notice how the call volume has been elevated over the last few days relative to the prior, several weeks. And they're putting positions on that extend past earnings. So you tend to do that if you have some sort of expectation of earnings, which I find curious. So that's AMC. We'll take a look at Palantir next, since it's technically first on the list. So, Palantir just is fucking crushing it. It's continuing to I'm really curious, like, to get a sense of what the terminal value might actually look like in here, which is really hard to project out. But right now, it has earnings on like the 1st or the 5th, somewhere right in there. So we'll see earnings coming through soon. That's a massive short premium position at the 35. So let's see if we can find those just out of curiosity. When did those come through? Looks like what, probably here on the 30th? What do you guys think? I guess on the 30th. See if we can find those. We'll just go into the actual options chain. I don't see it jumping out. It's a very interesting position. Let's see when that happened. Whoa. Oh, maybe it's the call side. $32 calls. Huh. If it's on the call side, that probably is either some sort of synthetic stock position. Let's see. And let's sort these by premium. That's good. Look over the last 7 days. There's the 150. That looks like a hedge. Let's find that 35. Oh, I clearly misread it. The fuck did I see? I didn't. When the fuck did that show up? So it didn't show up recently. So that's been there for a while. Because I just looked over the last week. And it didn't look like there was enough build out at the 35s. My guess is that'll be pretty far out. Pretty far out in time and held for quite a while. Just quite interesting. So Bay Area says 17 oct 160s paid 1368. And then the 15 AUG 165s. Okay. 17 oct, let's take a look. 17 oct 160. Okay. Like a 50 delta, that's not bad. These are just going to burn, these are going to burn theta a lot. So the main thing I would say for this position is just you'll want to be mindful of how much theta you're burning. So for example, if we just do a one lot and this is what, 90 days to expiration, is that right? Yeah, 90 days to expiration. And your theta I'm just updating my little calculator here. Kind of randomly built this yesterday, but it actually ended up being something that I'll probably keep. So the theta on these is 1004. Oops. So negative 104. Yeah. So here, we'll zoom this in. So here, essentially, your carry on a daily basis is going to be 10 bucks. So again, as per usual, I actually think another really useful metric while we're making, I always do these. I make like abominable fucking calculators out of nowhere, but I think that this will be useful for you guys to see. So we'll take a look at the strike on this side and then the premium, because I actually want to show you the percentage of the premium. So you got them for 1368. The strike itself doesn't really, but we have the 160. So we can calculate your theta as a percentage of the premium. So it's about 3/4 of a point. So the issue here is when you hold this position for extended durations, it just simply gets expensive. So let's say that we hold it for 30 days. We'll do E carry. This will be your total carry, but we're going to keep it as not multiplied out. Except we need to do it by time. And then we can figure out what the percentage of your option decay is. So everything else being the same, you're going to lose like 22% of your option if you hold it for 30 days. So the main point that I'm making here is when you're building positions like this, you have to take this into account is all. It's not inherently a bad thing, but there absolutely is a cost to carry, and you have to be sensitive to that cost to carry, because as I think we reviewed this yesterday, what ends up happening is you then need bigger and bigger price movements. So for example, right now, Bay Area, your long puts will be making money, right? Because they're trading at like spot prices like 15 and change. So that means that the stock has moved in your direction to a degree, which is awesome. But the problem here is, let's just say that it moved in your direction some, and then now it just kind of holds and trends sideways. Your options will end up losing money simply just because of this carry. So the main thing, especially in higher vol names like this, is you just want to have a game plan for how long you're holding them, what you're doing, so that the carry cost doesn't start eating too much into the potential profits. The other thing that I would want to look at is the vol, and to see how you did in terms of vol. So 60-day vol is good. You're in the 90-day. So 90-day vol, you literally perfect. 90-day vol is perfect. And then you have the 15 AUG. Those are super close. So take everything that I said and amplify it massively for these 30-day options. On your 30-day vol, you did bad. So 30-day vol priced it terribly. On your 90-day vol, you did great. So in this case, you paid a lot for the vol out in 27, 30 days, like way too much, way too much. The 90-day vol though is like perfect. You did great there. So grossly overpaid for 15 AUG. You can see that. And again, if we take a look at your 15 AUG position super fast, it's the 165s. So these are trading, we'll call it 710. These are 27 days, 165s, premiums. We're going to call it 710. And these are losing 21 minus 0.213. So you're literally losing 3% of your premium every single day as you hold this. So this becomes exceedingly expensive to hold, especially because you really overpaid for vol on these. So on this one specifically, I think that you think that you paid too much on the 165's 27 days. You would have paid way too much. So because of that, again, you just have to be really thoughtful on how long you choose to hold this for. Because let's say that you hold it for 5 days. If you hold that option for 5 days, you're going to lose 15% of the value, which is a ton to decay away that fast. So, yeah. That is my general thoughts there. In terms of the options plays, in terms of the stock, I think the stock is super strong. It continues, like I was saying before, it just continues to absolutely crush. Let's take a quick look at SoundHound. This one has been also rallying, showing strength. Let's take a look at the options chain and the vol. So they have earnings, looks like the beginning of next month somewhere. So you can see that priced in here, makes sense. And then we can see what our overall smile looks like. So it is pricing heavier on the upside for calls, the out of the monies to the upside. But this is like pretty even. It's not that far off. It's really not that far off. Let's see what we've been getting. So call volume has been turning up. Net premium in the front is pretty long. So I'm assuming most of that is on the long call side. Let's see. Almost exclusively. So the 12s, the 12s in July 18. Super heavy on the call side. Same thing for 25 July. So yeah, the call side on this is like pretty aggressively built out. This looks like some profit taking. And the fact that the calls are still that built out based on the closing that we would have seen yesterday is still pretty informative. So a lot of that stuff you can see -2 days, -2 days, -2 days, -2 days. So a bunch of this would have been closing positions in the front. That's all. It's not net negative because of some sort of downside expectation, which also kind of follows with the general trend that we see here. Let's see if there's any new news specifically for SoundHound. Let's see what these say. "150% growth, misleading, acquisitions rather than an organic expansion." Well, let's see. Let's take a look at that. I mean, sales is growing, but I do agree that sales growth is not good. There is an expansion in assets and liabilities. So yeah, I agree with that. Yeah, I think that this is fair. Revenue guidance, pro forma numbers, no organic growth. Okay. Trades at 30 times. Yeah, which is, well, I don't know if I would immediately call it super aggressive because it's in an aggressive growth space. So I do think you have to take that into consideration. But yeah, I mean, I do think that is like fairly aggressive. All right, give me 1 sec. You boys got to get my dinner order going. All right. Oh, this is perfect. Mel already knows what she wants. She literally sent me. That's sick. That makes this easy. Look at us go. Dope. About as easy as it gets. Cool. All right. We can get back at it. So let's take a look. By the way, what is this thing with this fucking hot honey? I've been seeing this hot honey thing popping up everywhere. And that makes me real fucking nervous. Hot honey pizza sounds fucking, that's crazy. It's fascinating because the fundamentals, I have to agree with some that I'm seeing here. The fundamentals don't look awe-inspiring to me, but the options market is very clearly bullish, which is just quite curious. Very bullish in the front, but most of this stuff moved. So we'll have to see what this looks like going forward. and then bullish in the back. It does look net short here, here, here. So, I mean, overall net short is like actually pretty aggressive. But we're not seeing it on the put side. We're just not seeing a ton of it on the put side. Yeah, I mean, it's the options market is pretty bullish. It's the main thing I see. All right, let's look at RIVN next. RIVN. Ooh. What's going on here? That's actually a big up day. This is a fucking ugly trend. What happened with RIVN? East Coast headquarters? That it? Expands Georgia with new Atlanta headquarters? That seems... Oh, that's back here. What happened on the fucking 18th? See, these are the interesting things, man. When you see a stock up 6% and I can't attach a catalyst to it. Kirk says probably Uber partner with Lucid News. Sympathy play on EV adoption. Let's see. I don't think so. Because you can see that the news happened on the 17th. And then it actually trailed down on the 18th. Lucid dropped 2.5%. Whereas RIVN had a really soft day on the day of the announcement of that announcement. And then a big day on the 18th. So it's a great guess, but I don't think that's it. Short. Wow. Fucking short. And a bunch of short calls. August. That's pretty bullish. I mean, net it looks more short to me. Yeah. Especially with where there's volume. You definitely see pot shots here, but there's enough instances where we're seeing pretty aggressive put volumes. I heard Lucid has a deal with Robotaxi. Is that right? Kirk was just saying it looks like Lucid had a deal with Uber. Is it with Robotaxi as well? Wait, Robotaxi's Tesla, isn't it? Lucid scores big Uber deal on 18th. No, you're right. You're absolutely right. Oh, no, it says to take on Tesla's Robotaxi. I see. Yeah, so Chris, well, you pulled your message back, but it looks like they're just talking about the competition because obviously Robotaxi's Tesla. So it just looks like they're speculating that it could be a competitor for it, which is fair. And that competition will be good, to be honest. All right, let's take a look at ASTS fast and we'll get to GameStop. ASTS. Chris says, because all my other messages are getting no love. Yeah, I don't catch all of them. And then also, I don't necessarily get all of them. The default sorting on here for like me to see the chat, there's like a top chat. That's what it always defaults to. So whatever that means, I don't know how it determines what a fucking top chat is, but it doesn't put all of them in here. But ASTS all-time highs. And this looks also super duper strong. I just realized Mel hasn't finished her order. Let's take a look at the options. Oh, whoa. Super bullish. These are interesting, the 67 puts. But yeah, this looks really, really bullish. Especially on longer term ideas. My guess is, yeah, same thing with most of the other names. You're seeing net negative up front, but a bunch of that is just closing positions, right? So if you look at all these high volume contracts, they're all stuff that expired. So just moving the overall position out. Let's take a look at vol real fast. And then I do want to take a look at news. I have a position on in here. Yeah, so overwhelming pricing to the upside. Which is good. Ivy looks a little lower than I would have expected. 30-day vol is high. 57% implied volatility percentile for 30-day vol. That's actually... I'm wondering why it's that high. That seems elevated to me. Yeah, that seems high. Everything else is much, much lower. And you can definitely tell it still has a near-term expectation. Which is very peaky, and I don't see earnings. So it looks like there's an expectation of some sort of news or information to come out. That's the main thing that I'm seeing here. Yeah. Huh. Weird. And then let's see if there's any specific news about ASTS. Kill some of these. I'm just grabbing a bunch of different articles for us to poke through. So the main play in ASTS is obviously the idea of a space-based cellular broadband network. And I'm just reviewing some of their growth metrics. And I mean, they're crushing it. Revenue growth year over year is 827%. Profit margins are still bad. Debt is still high. Still, I mean, 50% of cash, but it's still pretty high. So the company's core mission is to eliminate the connectivity gaps that affect people worldwide. Space mobile constellation of low Earth orbit satellites designed to provide seamless mobile broadband service. It looks like they're in the process of partnering with mobile network operators to extend their coverage. Income statement right now, minimum revenue. And still strong losses by just process investments. And right now, the balance sheet, it does have a decent runway. Total assets are up to 1.37 billion. So debt to equity is 0.63, which is, I think, manageable, especially for something that's still in a really, really aggressive growth phase. Primary risk is running out of capital before the technology hits the market. That's completely fair. So the financing rounds still has major involvement by places like Google and Vodafone. So that, I think, is a big feather in its cap. Institutional ownership is at 55% and still growing. I mean, it looks, to me, based on most of that, it looks pretty strong. Reese says, is there a way to tell when highly traded contracts are open and closed intraday? I'll note some unusual volume, but sometimes no large OI increase. Yeah, intraday, you would have to look at the actual like price chart for whatever it is that you're looking at. So the way to think about that is whatever the individual option is, you'd have to plot that just like a stock chart, but as an option price chart, and then to pay attention to changes really in supply and demand. That's kind of the only way that you'll be able to like really do that on an intraday basis, which is difficult. Within intraday, it's hard to tell. Chris says, talking about being down. Being down over 50% on a stock, up 50%. Yeah, and that's why with biotech timing is so important, because it's really, really easy. Because again, especially if you're using options, it just makes everything much more challenging to hold on to, because then you're eroding the value. There's just inherent drag. I mean, this looks good to me. Let's take a quick look at institutions. Yeah, so still net building, which is good. And then let's see what the insiders are doing. This looks okay too. There's definitely some sales, but this looks like, again, people probably taking some of their overall profit down. Lawrence says, did well on open this week, stayed above 9-day MA for a week, so got in Monday and it memed. Let's see. OPEN. Oh shit. Yeah, that's a wild move. So this clearly will be based on some sort of news catalyst. That's a heavy move. What was it? Started here on the 15th. So 15th looks like artifacts of probably insider trading. Somebody, my guess is knew that some of the news was probably going to come out. The 16th also. Huh. That's crazy. So there's EMJ Capital. So this looks like mostly being pressed by retail, which is always fun to see. This sometimes gets a little dangerous because a lot of times it's when they're potentially just going to step on themselves to get out. But yeah, this looks crazy. Kirk says one of the roaring kitty type furus pumping it. That'll do it. Because again, like this is still small, right? So like if we just eyeball how much is moving, I'm just going to move this really fast. Oh no, it's in the right spot. We're good. We'll go here. So this was what, $1. So here on this gap, it's $1. Total volume is 142 million, right? So very, very light, very, very light size. This is very, very easily pushed around, I think. But I mean, the valuation obviously just went up almost 5x. Just crazy. Really, really strong move. All right, let's take a look at GameStop. So this is the story. And this really has been kind of the story since this drop, really, since the post earnings drop, since the debt offering was complete. This is like extremely, extremely sideways. So implied volatility percentile is essentially as low as it's ever been. It continues to hover around 0 to 1%, which is obviously just extremely low. And if we take a look at the open interest, it's still maintaining a big call skew, but the overall OI is actually pretty light. So 813,000 versus 443. So pretty light, like overall sizing here despite the skew. So if we take a quick look at GameStop here, GME. Why is it not letting me write? Thank you. Yeah. I mean, this looks like mostly closing and moving out. But I mean, even this, right? The options in 5 days, most of these are sold. on the call side. So this to me looks like people that are just playing the vol curve and not expecting necessarily some sort of big massive move, but playing the volatility that's in there. That's been my play for a while. I still have obviously my GameStop coverage strangle on, and I'm short in 15 August, the 23 puts, and then also the 25 calls. So I'm kind of just trading this exact price activity, this very, very sideways price activity. Chris says looking for a life-changing gap fill. That's a fucking way to trade. I mean, if that's like the basis of the trade, in my opinion, it's a bad trade. I would not try to trade that way. Not super sustainable. On GameStop, there was a couple things that I did want to talk about that did stick out to me though. So the first thing is this. I actually love this. So what we're seeing here is a pretty strong positive expectation, but shifting further out in time. And I know that that's always to the dismay of GameStop short squeeze hopefuls. But I argue that this is still way better for the company and the sustainability for the company long term. The reality is the probabilities of a short squeeze in here don't look super great. And the reason for that is just because it's gone through enough offerings that in my opinion, most of these short trades that may or may not be open, may or may not be legacy, they've had ample opportunities to close those at reasonable prices. So I struggle to see that argument. I don't think I've seen evidence of it, and it just doesn't necessarily seem to be like what's manifesting here. So it's a little less than ideal for the people that are hoping for some sort of big short squeeze. But the positive side to that, in my opinion, is that it means that the company is like the fundamental company is actually pivoting, and it actually looks like it's positioning itself to actually do well. It's way less of this, near-term, short-term fulfillment in favor of what looks to be a much longer-term potential. So, not really seeing a bunch of pinning. Pretty much net long the entire chain. Yeah, so there could be a little bit here. Also super net long deltas here, which is kind of wonder 20s. I suppose I could see it. What expiration? Yeah, so these are super far out in time. The front isn't bad. And yeah, so mostly what we see with the net deltas here is a trickle down in terms of where the exposure is, and then a subsequent rollout of it. Chris says, can you look at NMRA? Yeah, in a few moments. I see what's going on here. So you're like obsessive about this stock. Now I understand. I was like just looking back, catching some of your chats. Yeah, we could definitely take a look at it. When it hit 217, up 70%, $1,300. Don't see why it shouldn't rebound. I mean, there's a million reasons why it might not rebound, but yeah, we could definitely take a look at it. But anyways, back to this net deltas. long. This one's interesting to me. At the 25, like such net short on the put side. Yeah, super, super light activity, that's for sure. Yeah, look at that. And that's in the front. That's stronger than I would have expected. Chris says, in case you guys wondering, Chris says a lot about that stock. So if you guys want to know about that stock, I'm sure you could make his day if you asked about it. The puts, there's much stronger put premiums in here than typically seen. These 65s. That looks like synthetic. Look at this. The 60. See, this is the shit that's so fucking weird about this stock, man. The 65s here. Look at that. The OI is 809. The volume on the day is 1210. Let's see what the volume was here. See, and this is how you know it's not a synthetic. Well, at least a synthetic short. Because if this is a synthetic short, you would see the corresponding option on the call side, right? So you would expect to see, if it's a synthetic short, put, bought, call, sold, but not there. So this to me starts to look more like that locate game that they play. Now, I don't think that the locate game in this context is necessarily done because of like some super long-term legacy shorts that don't want to close their positions. I honestly think it's just greedy market makers that want to underhedge and don't feel like actually carrying the position. So, yeah, the interesting thing here is that it's very clearly on this one side, and it complements some deeper in the money stuff, right? Like the 75s have 2,500 existing OI. The 85s have 1,600 existing OI. That's fucking wild. And what is this? June. Where's the strike? 26, the 60. There they are. Oh, this one's smaller. That does look like potential locates, though. Because these look sold. Let's take a look. What do we want to do? How do I find these? Can I find them here? Is there like a trades? No, this isn't it. I think here maybe. I want to find that specific strike. Let's see. Let's go. Huh. So a little bit of unwind there, but then a little bit of long there. What is going on? Let's go find those, shall we? I want to see if we can pick anything up from this. This is last 7 days. All that stuff looks fine. Let's find those puts. So they are, the first one I think is out here. And we need the put side. No, not the 10s. Let's do longer time. We need those super deep. Where the fuck are they? We'll literally take a look year to date. We're looking for those super deep in the monies. So our strike at least is a 60. What the fuck? What the? Why would they not be here? Definitely would have been sometime in this time frame. Let's find the actual contract here. GME. We want these, we want the put side, we want the 60s. What am I fucking up? Dude, fucking riddle me this, Batman. Where is this shit? It looks like it might have been what, here on 12 June? See if we can find it. Here's the 105s. Okay, so we're starting to find some expensive puts. But these are coming in, these are being bought. Here's the 65s. Fucking finally, dog. These are out in 27. But it's what I would expect. So these ones are sold. Yeah, these ones are sold. So, and that's what I expected to see, like more of that general behavior. Yeah, super, super interesting. Because the positioning in GameStop, otherwise, it's definitely like short-term price behavior. And it's really just playing this short-term vol. That's what pretty much all of these front positions are doing. The spot that's incredibly interesting to me is to see the put premium plummeting like this. So let's see what happened on, because this is also super short. So we should see some stuff from the 18th. The problem is it literally might have just been not, they might be really, really small size, which is interesting. Let's add GME back. And let's take a look. I'm just going to do it first by puts and the strike. $60 is the minimum. There you are, you motherfuckers. Fucking finally. Damn, that was a pain in the ass. Bought. Yeah, because these are all really, really small. Fucking A. Dude. It's so smart. Notice how small all of these trades are. That's absolutely hilarious. And most of it looks bought. So the issue with the bought side is that that doesn't behave as synthetic long. When you buy, you're going to have short deltas. It behaves as synthetic short. But it's bizarre that they'd be willing to pay for it. Because, well, I guess vol might be low. It's 181 days. Let's see where vol is for 181 days. Vol. Yeah. Okay. So maybe that's it. Maybe it's just super cheap downside. Like, 'cause I mean, they're getting it at rock bottom vol. And the other thing to actually pay attention to is this. The smile is switched. So more often than not, we see the call side showing elevated vol compared to the put side, but that's inversed. That's a first for a long time. I didn't even bother looking at it because I entirely did not expect to see that. Yeah, I expect to see this generally. Wow. Well, in these longer term stuff, there's definitely more put side vol. So all of that to me in GameStop, it looks like near-term price behavior is trading short-term vol. And the stock itself looks highly congested, where we're just oscillating sideways. The term structure looks more normal than usual, where front vol is quite cheap compared to back vol. That's abnormal for GameStop. More often than not, when we're looking at GameStop, we tend to see really expensive front vol that then trails off. But that's not the case here, and that's just because where the price is. To me, it looks like it needs a catalyst. Now, the interesting thing is, I think recently Cohen came out, and there wasn't, like, that didn't even really provide much of a catalyst at all. So, yeah, I mean, it really just depends on timing, I suppose, and when we actually get the next larger potential impact here. But I don't necessarily think it'll be next earnings, but it has earnings on September, early September. Yeah. All right, my dinner's pulling up, and I told Chris that we would look at NMRA. So let's do that super fast. So first things first, for anybody that knows the channel, you guys know I don't look at penny stocks. So that's the very first thing. I'll look at it just because I can tell that you're really wrapped up in the stock. So I will look at it. But normally speaking, just so you know, if I look at a penny stock, normally I don't even bother. And it's because penny stocks, you cannot you cannot take anything from it. That's the problem. Is it really depends on how well you can conduct underlying fundamental analysis. It does have options, so that gives me something to look at. And it does look like it's mostly playing to the call side. So let's see what that looks like. So this looks like people selling off. So what it looks like is somebody knew, this is insider trading. Somebody knew that something was going to happen, whatever this was. I don't know what it was, but somebody knew. And you can tell because as soon as that thing ended, what do you notice happens to call premium? It starts massively unwinding. So this is somebody who built a relatively small position, right? This is all super small stuff. It's a $35,000 overall premium day. So tiny. And then this gets essentially unwound, at least a good bit of it. 12,000 come out of it. So this is somebody that, again, knew that this was going to happen. This is insider trading. It happens in penny stocks all the time. It's why I don't bother with penny stocks, because it is a generally losing prospect. You're playing against people who eventually some of them will know something you don't, and they'll trade on it. Especially with something as light as this, you simply become the exit liquidity. The timing of it, I think, is challenging. Now, I don't know anything about the underlying stock though. So let's take a quick look at what the actual like fundamentals are, because I don't know much about it. NMRA. I mean, this looks awful. This looks absolutely awful. So it's absolutely burning through money. Take a look at its total assets. It's literally burning through 500 million a quarter. So their runway, I mean, they have 5 quarters before they completely burn through all this unless they do something else. So maybe raise more money if they have a promising offering. Phase 1 initiation clinical study of M4 positive allosteric modulator. Okay. So let's see what this does, because I do not know. It looks like I just saw the word schizophrenia somewhere. Clinical stage, biopharm, therapeutics pipeline, 7 brain disease programs. That's good. So that helps them because it gives them a slightly more diverse set of stuff that can hit, which is good. That's really good. Including 3 clinical stage programs. That's great. So they announced phase 1 of this thing, stable schizophrenia. So it's highly potent, selective, positive allosteric modulator of whatever the fuck that thing is. And the idea is it might offer a better therapeutic profile. So the way that I look at stuff like this personally is, unless I have some sort of really strong insider information or some sort of really strong, deep eminence, not just of like the news that comes out on the company, but the company itself, it's a complete coin toss, especially because it's only phase 1. Like they're just starting phase 1 trials. So that kind of thing can help it a lot. But the other thing I would be interested to know before I go grab dinner is what's the long-term price behavior of this thing? Because I can see that it's coming down a lot and then it's starting to rally a little bit. So, oh, fuck. So just in the end of 2023, this thing was $15. Oh, damn. So what the hell happened? What is this? What is this? Something terrible happened on either after the close on 31D. So let's see if we can find it. They report back of a major depressive disorder. It looks like solution or drug that they had. So the study did not demonstrate statistically significant improvement, primary endpoint reduction, depressive symptoms. Yeah. So, I mean, that's not good. So then the follow on is it depends on like if this next iteration somehow gets it completely correct. But even so, it would really need to knock it out of the park. So yeah, fascinating. I like learning about those kinds of disorders and diseases and the potential drugs for them and different ways people are trying to heal people. I think that's really, really cool. From a stock perspective, I mean, it honestly looks really bad to me. Just because it looks bad doesn't mean it can't make money, right? Like obviously it's gone up already. It's doubled. That's the nature of penny stocks. But I trade sustainably, right? Like I've been trading for over 18 years now. So I don't care about being able to just get lucky on an individual thing for the wrong reasons. I care about my ability to consistently be able to generate a profit from stuff, which is difficult, especially in something like this. You'd have to have a really, really great news source is the way that I would think about it. But it is time for me to grab dinner. It looks like Chris did not like that at all because I just noticed before he had said, enjoy your dinner, and then all the messages are gone. C'est la vie, that's how she goes. But if you guys need anything, you know where to find me. Be an outlier. See y'all later.